Welcome to Wage Cucking with Jmo.
Hey guys, welcome back to Wage Cooking with Jmo. We pulled Jmo back in for just some insight into what he thinks is going on in the market, and also from Andreas too. So hey guys, how's it going?
It's
Pretty good. How you doing, Blake?
I'm down bad.
Me too.
I'm poor now. I'm very poor.
Yeah.
Literally, probably overnight there was a bit of a sell-off there where we all got a bit poorer once again. Yeah, what are your guys' thoughts on that?
Yeah, it was a pretty big sell-off actually. I'm pretty surprised it was that big, given like the volatility of Bitcoin, Ethereum, like the large market cap coins. They I guess when they have been selling off, or when there has been price movement, it hasn't been this severe. And then I looked at the charts when I woke up this morning, and it seemed to have all happened within, like, I want to say like a 20 to 30 minute time frame, where I think Bitcoin dumped almost 10% within like the first 15 minutes, and then recovered a bit, and then dumped some more, and then Ethereum did as well. But I guess Ethereum like recovered a decent amount because there was some news about potential Ethereum futures ETF, which I guess is bullish. Although I've heard these rumors before, and I don't really know if they mean anything. But yeah, the whole percentage overall of the movement and how like quick and abrupt it was surprised me a decent amount.
Do you think we get these large swings because there's very few people left in the market, so that there isn't that much liquidity, so we have less people to absorb it?
Yeah, it's possible. I actually feel that like a lot of the issues happen because there's so many exchanges now with perpetual contracts. So you can trade like all these assets without actually having to own any of these assets. And I noticed like a lot of the issues, if you look at like the anytime there's volatility, there's always going to be these issues with the price of the perpetual contract versus the price of the spot contract. And then I noticed even within some of like the very large cap coins, those prices were way off. The biggest one I noticed was Ripple. Ripple, like I forgot which one it was. Either the perp or the spot was like they were like 20% apart from each other at one point. And I guess
I saw a tweet that was 45% on between two markets on Bybit.
Oh, really? I only saw 24%. That's possible, but like it just shows that like eventually I assume that there's people just like arbing the shit out of it, and then it restored restored peg, or whatever you want to call it. But yeah, I felt like that's kind of wild. I guess people aren't that liquid right now. The other thing is like there were a lot of liquidations, which probably drove down the price way more than it needed to be. Like on chain, I think as of a few hours ago there was like $1.2 billion worth of liquidations, which is like the
on chain.
Yeah, sorry, on centralized exchanges. Which I think is like either the biggest in the past few years, or like the second biggest, the biggest being the week of the FTX fiasco. There were a lot of liquidations that week. And then I think on like DeFi lending protocols there was something like 100 million, which is a lot, but it isn't that bad. But there's a lot of like risky debt out there right now, but I think if like the price of Ethereum drops like another $100 or $200, they're somewhere between like $200 and $300 more million of liquidation. And then also so Venus, which is an Aave fork that is deployed on Binance Smart Chain. It got exploited a while ago for like all its BNB. It's like a ridiculous amount of BNB. And then like the the exploiter of 5-headed 200 IQ'd, he deposited all the BNB back into Venus, which drew like all the coins that he could get out, that he could bridge over, and then it just sort of left that position. So like he obviously has no intention of paying back that debt. But he just converted it into coins that he could bridge out, that like that couldn't be censored.
That is really clever.
Yes, so that position is just like sitting there, and basically like I think it was a few months ago, the Binance, or the BNB price got to a point where it was pretty close to the liquidation price for that position, and everyone was scrambling. They were like, oh shit, like what do we do? Like we can't really sell this much BNB on the Binance chain without like absolutely destroying the price. So then I think what they did is they did like a manual override and let the Binance chain, which I guess is like Binance itself, handle the liquidation. And then I noticed today it hit the liquidation price, and then if you look at if you look at like the Venus protocol, they made two transfers or two like smart contract interactions that was attempting to liquidate the position in some way, but both transactions failed, and then the price went up a little bit, so it was out of liquidation range, and they're like, I guess we're okay now, and the position is still there.
But when you say the liquidation attempt failed, that just means, does that mean it wasn't possible to liquidate because there was no market, or does it mean the price wasn't low enough?
The price was definitely low enough. Like the way I understand it is that they sent at least one or two transactions in order to liquidate it. The transactions failed for some reason. Like I don't know how transactions work on Binance Smart Chain, but like on Ethereum, like there's like a bunch of reasons why your transactions would fail. Like you don't spend enough gas or whatever. Okay. But the transactions failed, and then like I think the price ticked up a little bit after the dump, and then they were just like, okay, I guess we're not doing these transactions.
What I mean, since you said this happened ages ago, so what is ZC doing about this? Basically, like what do you do when it's your centrally issued coin, and it's wrecked on your own chain? So you can't just like, you can't just like dump this chain and just say we're not dealing with that anymore.
Yeah, it's a good question. I don't really know what the play is. Like I don't know. I don't know what you can really do, because like I guess you can override the protocol and just like confiscate all the BNB. That would make sense, because
that's what I would do.
It was stolen. But then you get in the dilemma of like being like a centralized authority, being able to just reap from funds out of these protocols as you see fit. It leads down to a slippery slope. So I'm not exactly sure what the solution is, but their solution was basically to leave the position open and then like facilitate the liquidation if it got to that point. But I don't know if that's a good plan. It doesn't seem like a great plan, but I don't really know what their options are besides just like telling the protocol to close the position and send them all the BNB.
Yeah, that is it gets interesting in DeFi. What's the difference between Venus and Aave? Do they have worse coins, or like what's the deal?
It's I'm pretty sure it's like the exact same thing, but it's just on Binance Smart Chain. So they have like a bunch of like they have BNB as collateral. I think they use like Cake, the pancake swap token, as collateral as well, which is the biggest DEX on Binance Smart Chain. I'm not actually sure what's going on in Binance Smart Chain these days. I haven't really been involved since DeFi summer, when like there was just a bunch of nonsense going on there.
Good memory. What's the you said like you were looking at Ethereum, and if the price drops to another few $100s, then there's going to be a lot more liquidations.
Yeah.
But in that situation, if you see these liquidations coming, is there any way to make money from that, or do you just have to sit and just hope it ends?
I guess you get a short Ethereum. That makes sense, assuming funding isn't too high. But the way these liquidations work is that they drive the price down further, because like the
Exactly.
amount of collateral used on chain, like Ethereum is used for collateral quite a bit. So like all these positions that need to be liquidated, it's just like additional Ethereum being sold on these DEX markets. So I guess the other thing you can do is put in like lower sync orders for Ethereum, assuming like a pretty violent move down, and then like a gradual recovery, which is generally how all these like these movements in the market work, where there's like a huge move in the market, and it's compounded by like cascading liquidation, so it drives down the price even further. So then you get like a straight down line, and then it always bounces back at least like between, I want to say like 10 and 30%, upwards of like 80%. Like if you look at the Ethereum charts today, it recovered quite a bit, but I don't know how much of that was just like the market it's evening themselves out, or the news of the Ethereum ETF and people were bullish and started buying Ethereum.
And I guess the problem with these recoveries is there's nothing saying there can't be a second event, which we saw on the FTX crash, right?
Mm-hmm.
I mean, at least a few of our friends in real life survived the first one and just completely ape-longed the assets, and then got wrecked on the second one, which was also horrendous. It was so big.
Well,
like if you were like 5x, you're wrecked.
I don't think we're in like the safe zone yet. I'm actually like still kind of unsure what would cause like such a massive sell-off. Like the big news story was that Elon's company SpaceX sold. Okay, so the headline was like they sold the $380 million worth of Bitcoin, which is not true. Like if you read the article, it's basically said at some point last year that they had this amount of Bitcoin on their books, and then at some point this year that they had maybe like 70% less. It doesn't mean that they this morning they woke up and decided to be violent and market sold their entire bag of Bitcoin.
And then as well, everyone keeps like, now that people are just clinging at any straws they can. I've seen people talking about Evergrande being a reason why our Bitcoin price is down. I don't know how Chinese real estate ties in, but supposedly it does. And I think we're just
I don't know either, especially since that like situation. It was like it's been years since that like that situation, and it's like super obvious that they were going to go bust at some point. And then like if you look at the prices of like equities and stuff like that, they weren't impacted very much by the news. You would think that like if an event in like the Chinese real estate sector where like all this it would be basically the biggest like developer, and they go bust, then there would be some impact on like the traditional markets, but there was far less impact there. So I don't really see how that happens. Like I don't think Tether has like commercial paper in Evergrande like Bitfinex says they do. So I'm not completely sure.
And another thing you were mentioning this week was this GSR market maker. Is that what they do, or do they have a VC arm as well, like everybody else?
I think they're just strictly market making.
Wow, professionals.
Yeah.
What I mean, I remember, I think it was earlier this year, we heard this story that the story was a bunch of the market makers were leaving crypto to some degree, and it didn't really seem coordinated. I think it was a bit random. I think Jump said they would do a little less, probably because there's not much action.
Yeah.
Some other companies said they would leave completely. I think they were citing like regulatory uncertainty.
Yeah.
But I think pretty soon everyone realized it was just because they hadn't been successful.
Yeah. And like
what about this?
There's quite a bit of risk of like a lot of these traditional finance firms come in, and then they don't really like understand fully what they're getting into. They don't figure out like the custody part of things. Like these markets are 24 hours a day, 7 days a week, stuff like that. And then like if
and the exchange is
volatility,
being run by a 12-year-old.
yeah. And then like if you want to trade on chain, like you have like these massive latency issues. Like they're used to like trading traditional markets where they just like have a microwave line to the exchange, so they execute basically zero latency trades, and then now suddenly they have to deal with like Ethereum blockchain and like pending confirmations for deposits, and they're like, oh, fuck this shit, or we're out of here.
They're just sitting in the advanced settings in MetaMask, trying to find where you can reset the nonce. I'm getting liquidated. How do I manually set the nonce, Bob?
Yeah, so I think GSR was like one of the bigger market makers. I think that they were the initial. They've been in crypto for quite some time. They were the initial market makers for Ripple, I believe. So basically, at if I understand the backstory correctly, at the point where there are Ripple markets, the Ripple Foundation basically gave them like 50% of the circulating supply of Ripple, and we're like, you market make it and trade this, and they absolutely killed it. Like I heard that they were making like a ton of money, and they're being paid by the Ripple Foundation to do this.
They whoever I don't know if they were the only company doing it, but one of the companies doing this, they called me in probably 2014 because they're like, hey, do you want to sell some Ripple on your exchange? Because I was running a smaller exchange, but there weren't many exchanges.
Yeah.
And we were like one of 3 exchanges with XRP. And it's like, so they explain what the deal is. The deal is you never talk about this deal, first of all. You're not allowed to talk about that. And they just give you a shit ton of XRP, and you sell it on your own exchange, on your own order book, and then you split the profit with them.
Yeah.
And you tell no one. Yeah. And then you just repeat. This is literally what they were doing. So if they called me, they had called everyone.
Yeah. I feel like most people in crypto don't actually know what market makers do, because there are quite a few. I guess you'd say different types of market makers. So like the most basic one is like the neutral market maker, that basically they're paid to provide liquidity. So they put liquidity in all these markets. That means that they put in buy orders, and they put in sell orders. So if someone came on the exchange, they could buy and sell that asset with like without much slippage. What most crypto Twitter thinks market makers are doing is that they're just like artificially like pumping and dumping the price and creating like prices for the market, which is somewhat true. I mean,
yeah, I was going to say that is actually true.
So like there are market makers that do that, and it's difficult. I'd say a majority of them are the market makers for these like these shitty emissions tokens, where like people are like basically anytime a coin like this gets enough market cap and enough volume where there are perpetual contracts for it, then the market makers, they basically monitor the perpetual contract. At least in my opinion, this is what they do. They monitor the perpetual contracts, and like and anytime open interest gets weighed one way or the other, they try to wreck as much of retail as possible. So like the biggest example, I know this for a fact. These Chinese market makers that were market making the what is their token called? There was the Steppen token, but I forgot the name of the token. Yeah. It was like GST or G something.
Oh, there were 2 GST tokens.
Yeah. So like there were these market makers, and then Steppen got huge, so that there's like perpetual contracts, and then basically the business model of like the users to step in is like you walk around in a circle all day and generate your GST token or whatever, and then
Don't talk to me
you
about the fucking the sneakers. Don't talk to me about this.
He's got so many sneakers.
yeah. Anyways, you walk around for in a circle all day, and then you get home at night, and then you sell all the GST you made from walking around, and then
Not if you're Blake.
Oh man, I've got so many of those sneakers, and now that I don't know what they're worth. Like what, $20?
Yeah, so you get more GST if you have these sweet ass sneakers and you walk more and stuff like that. But so like everyone knew that this was the model. Like everyone knew that the token didn't really have utility, and then they were just going to sell the token. So then like eventually the project got big enough, and there were perpetual contracts for it. So then everyone was like just shorting GST. Is it called GST? I think it's GST.
I think it was GST. Yeah.
I remember there were two tokens, and like I at one point I knew the difference between them, which it doesn't say much because they're both as equally as worthless.
I didn't realize this. GST stands for Green Satoshi Token.
Yeah, green Satoshi token. There was another one too, like GMT or I forget what it was.
And do you remember? I don't know if you saw this at the time. There was this weird thing where they launched it on two chains, but you couldn't bridge it. So like there was like a secondary Chinese market for like Solana or like Binance GST or something.
Yeah. They launched on Binance Smart Chain, and then like the prices differed, and like you couldn't bridge it. So they're essentially two different tokens.
Yeah.
But then like so that they launched perpetuals for that, and like everyone was short, and then like basically the market makers were like, oh, let's fuck with these people that are shorting the tokens. So like they would just like have these like random scam pumps like every few weeks or so that would liquidate like all the open interest on the perpetual contracts, and then the token would obviously dump back down again, and there would be like another scam pump and stuff like that. So yeah, I feel like that's the type of market maker that crypto Twitter thinks what market makers do. And then I guess like I knew this, but there is a third type, and that is like we get your token, we sell it, and then we split the profit, and that's making the market, I guess.
Or the Alameda model, where we get an option on your token, so we pump it up to that date, and then on the day we're no longer locked, we destroy your project.
Yeah.
What?
Yeah.
They gave me that offer on the phone. I'm like, man, this is horrible, but I'll get the pump. So I was really thinking about it, but my project was too small, so they wanted too much of the tokens.
Yeah, makes sense.
Speaking of market makers, I saw that you were doing some small action on what is it, Worldcoin, Jmo, which has a infamous story of market makers. And what was your thesis behind that? I mean, obviously the current market is kind of screwed anything up.
Yeah, but I got pretty fucked up, and I sort of realized like I was being an idiot about it. But yes, so Worldcoin, where they scan your eyeballs and then you get a coin. That's our distribution. I'm gonna get these numbers wrong, but I think they gave like 5 different market makers, I want to say 20 million of their coin in order to market make whatever that means. And
to market,
just go make the market. Here's all these coins. But in all their contracts, the way I understood it was, I think it was after a 3-month period, they had the option to either return all the funds or not return all of it, but like the amount they needed to buy was at a base price of $2 and increased by, I think it was like 4 cents for every, I want to say like million that they had to buy. So basically the game theory is just like, if you borrow 20 million and you return 19 million, I think you can buy 1 million at $2. But if these numbers are actually wrong now that I'm thinking about it, but like the theory still applies. So you can buy like $1 million at $2, but if you want to buy 2 million, it's like $2.04, and then it goes up and up and up. So that the more you have to buy back at the end of the period, the higher your average price is. So then, like it leads to an interesting game theory perspective, because it's all PvP basically. That if there's like 5 different market making groups, they're all given like the same basic strategy of like you want to make money from this, but you don't want to have to spend too much money at the end to buy back the token. Like, what's a good price to sell? What's a good price to buy? Stuff like that. So like the $2 inflection point for the token is I think is really important, because like if it gets much above $2, they're at least incentivized to sell some of their token because they have the option to buy it back at a base price of $2. Obviously, it goes up, and they might spend more than $2 per token. But then, like, so like anything above $2, I think like it's a pretty easy short, just because, or maybe like anything above 250 or something is a pretty easy short, because like you have like 100 million tokens, which is like 70 or 80% of the circulating supply, I think. Heavily incentivized to sell, so it makes sense that the price will be capped out at around like the upwards of $253. But then if it goes like around or below $2, it becomes like sort of an interesting dynamic, because like all the market makers have incentive to basically you get the trading price to a point where they can sell and rebuy the tokens cheaper. Whereas if it's trading at like, I don't know, it's trading at like 140 now, then their market making deal isn't particularly good, because like they can't exercise the option, or like if they exercise the option to rebuy, that they're taking a massive loss.
Yeah.
So then yeah, sorry, go ahead.
Yeah. Because I heard you talk about this, which was okay. It does assume a lot. So I wasn't ready to buy Worldcoin based on that. But then I saw the video with one of the founders, and he's casually like, well, I mean, the way it works is, and he obviously doesn't, I don't think he has a lot of finance experience, so he just explained it very plainly, which is, if the price is high, then we'll make more tokens. If the price is very high, we'll make more tokens. But if the price is lower, we'll just not do that. So I don't know if they'll buy back or something, but he basically said like, oh, no, it's great, because like, we'll just keep the price in this range.
Yeah.
Which to him seemed completely normal. So when I saw that video, I'm just like, okay. So
he was basically saying, we're going to manipulate the market.
Yeah.
Good luck, guys.
Yeah. And I mean, so I'm betting that they will for another while.
Yeah, I think it's pretty interesting dynamic, because like it's one of the few tokens that's like pretty clearly range bound. Like,
yes,
I feel like it's never going to go over a certain price, and it's never going to go below a certain price.
Yeah.
But like, I don't think anyone really knows what those two prices are. Whereas like other assets are like Worldcoin's not going to do like a 10x.
No.
I mean, like theoretically speaking, it's not. Whereas there are plenty of like other assets with its market cap that have like a potential to go 10x. But then also, I don't think Worldcoin's going to go down like 90% or 95%, like all these coins as well.
And I mean, this might be a little 40 IQ here, but if you say it's range bound, then what determines what the range is how many people have figured out that it's range bound.
Yeah.
Because as more people find out, that range is going to increase, right?
Yeah.
But if the people running the mint have decided on 2, and the market makers have decided on no less than 180, right, to sell after these months, then that's where it's going to be. But then obviously as people start buying at the lower end of the range and selling at the higher, that's going to compress until, I guess it's 2.
Well, like the other thing is the actual token distribution is kind of ridiculous. It's like if you scan your eyeballs, you get basically none. So there's like hundreds of thousands of people that have like one millionth of the supply, right? And then like I think like I don't know if this number is correct, but like it's either somewhere between like 50 and 80% of the circulating supply is controlled by the market makers themselves. So then you have like all these individuals who like don't matter at all, and then you have like five big entities which basically control like 100% of the supply that are like basically battling each other to make as much money as possible, like trading the supply. So like if the unknown here is you don't know the market maker strategy, like what they're looking to do, like at what prices are they looking to accumulate, at what prices that they're looking to sell. You can only guess as to what they're doing. And like the other interesting thing is like I said before, it's like PvP. The market makers don't know what the other market makers like are doing or what their strategy is. So like they're not really competing against like the retail traders. They're mostly competing against the other market makers, because the retail supply is just like a small fraction of what the market makers are holding.
They're also you're right. Sorry.
I was just going to say, based on all of this, I do like this range bet. I do like it, and also that this is definitely not something you would hold even for like. Honestly, if this doesn't pay me within a month, I'm out because this is if you look at it's just like they've done the playbook of like circulate 5% of the coins and just hope nobody notices.
You were totally right as well, Jmo. So there's 100 million that was given to market makers, and the circulating supply is 126 million. And then also what's really interesting is when you look on the website about how you get the payout. So when you verify your uniqueness, like do the orb thing, then you get one Worldcoin per week for an indefinite period. So that's like what, $2 a week.
And that's 150.05. Not that I'm watching the price here.
But it's weird though, because we put this in the shitcoin.com newsletter as well recently about in some countries in Africa, people were like basically farming uniqueness, farming people's eyeballs, right? So they're doing like an upfront payment and basically saying, oh, here you go, have like $10, and then they just farm the coin, I guess, every month. That must be surely how it works.
Man, I feel like that must be like one of the most depressing businesses of all time. You like go around handing around $10 in order to accumulate like $2 a week until the coin goes to zero.
That's pretty I don't know if this was Worldcoin, but I think how they try to solve this is that you can re-register, which rugs the person who bought your eyeballs. I don't think they took into account that the person who bought your eyeballs is going to come back and complain.
Sam, I bought like 20 million eyeballs, and my eyeballs aren't working anymore. Could I have a refund?
Something like that.
Wait, I'm wrong here. So when you initially scan, you supposedly get 25 Worldcoin, I think.
Oh wow!
You get 25.
Now we're talking.
The big money. Big money.
Yes.
And then literally as soon as you got those eyeballs, you just got like recurring revenue.
What else do we have going on? I'm not going to talk about these ETFs because it's so tiresome. It's the only worst thing is macro. If somebody says macro, I just leave the room. It's so ridiculous.
The macro is looking bad, guys.
Oh my god.
If you want to be a little bit going back to a previous episode topic, we can run through your recent interactions, Jmo, with Alchemix.
Okay, sure. We can talk about that. I got into it a little bit, and I ended up deleting my tweets because I didn't really want to FUD their project too much, because I think it's like a reasonable project. But basically, Alchemist is a project. They popularized what they called self-repaying loans. Basically, they have like a synthetic ETH product, and they initially started with a synthetic USD product. So you deposit DAI, and then you admit 50% of its value. Like if you deposit 100K DAI, you get 50% of AL USD, which is supposed to be pegged 1-to-1 to USD. And then the DAI is deployed like somewhere. And your debt is slowly repaid. So like the loan repays itself, where you're just given the stable coin. So I think the ETH product like works the same.
And they are deploying this sort of like, I guess, Yearn and all this.
They're what?
They are deploying this for you, so they are trying to get yield on your DAI to pay back your loan and keep some.
Yeah, as far as I understand it, that's what they're doing. That they're deploying it for you, and then they issue you like a token that's supposed to be collateralized by your deposit, and like the debt that you incur is slowly repaid. So they have like a similar product for Ethereum. So you deposit ETH, and then you mint AL ETH. And then one of the issues we talked about the other week was Curve was hacked, and a lot of the pools were drained, specifically the ones that had native ETH. And then one of them was the Alchemix AL ETH pool. And then I guess since then, the hackers return the funds. The story is a little bit complicated, and I sort of understand what their position is, but I still don't think they're in the right. So the hacker returned the funds, but the funds were returned to the Alchemist treasury and not to the Curve LP. So basically, think about it this way: if I put Ethereum on Aave, and Aave gets exploited, and the Ethereum gets drained, and the hacker decides to return the funds back, like he's not going to send the Ethereum to the Ethereum Foundation, because they're the one who founded Ethereum, right? They should send the funds back to you. But in theory, that's what they're doing here. Like the funds should at least, if not go back to the individual LP, go to Curve, and Curve will figure out the distribution, because the funds were on Curve. But instead, the exploiter, I guess Curve helped negotiate the deal with Alchemix, and Alchemix received all the funds. And at this point, it's been, I think, like 2 weeks, maybe 3 weeks since the funds were returned, and none of the LPs have been given like any of the money back. So the reason why the situation's a bit more complicated is because the exploiter kind of fucked everyone over by, I think what he did was he drained like basically all the Ethereum and some of the Alchemist Ethereum, but he left like a decent sized chunk of Alchemist Ethereum. So like in theory, I think the pool was somewhere around, I want to say like 40% Ethereum, 60% Alchemist Ethereum, and then but by the end of it, it was like basically no Ethereum, and then 100% Alchemist Ethereum. So then you have, sorry, go ahead.
How because Curve is not one of these like constant product pools. So what is the price of AL ETH in the Curve pool if there is basically zero Ethereum?
Yeah, that's I feel like that was the main issue, because like then you have like all these other exploiters, or these MEV people that are depositing, like they're doing a swap where they're depositing 1 Ethereum and withdrawing like 500 Alchemist Ethereum, or whatever the ratio is. So then like their problem was compounded by the fact that like the remainder of the pool was drained in this manner. I mean, like drained is it's not a great way to describe it, but the remainder of the pool was like fucked up. I don't know how to describe it, but like because of this imbalance in the pool, people were allowed to make profitable trades where they would deposit 1 Ethereum and like withdraw like 500 Alchemist Ethereum.
I thought the purpose of Curve was that you don't get prices like this.
Yeah, you don't when there are two assets in the pool, but when there's literally no Ethereum in the pool, then you have like the hacker removed basically every Ethereum. There was zero Ethereum, so it's just like a one-sided market. So that people were able to use this one-sided market to swap Ethereum back into the Alchemix Ethereum.
Okay.
So then,
I was just surprised that that it would let the price get so far away from one.
well, like there at that point there was no price. Like
Yeah.
it should have been infinite, right? I mean,
Yeah, exactly.
if you have zero of one asset and one of the other asset, how does that like how does a swap pool function? Like
Yeah.
I can't even like I don't know the actual like the algorithm or the actual ratios that they're paying out, but in theory you should be able to deposit like 0.1 ETH and
get
basically
yeah.
to take all the Alchemist ETH.
Exactly.
So then that happened. So then like now I guess they're trying to claw back on the people that like that made these profitable trades. So then like where I come in, I just came out and said, I made a tweet that like it's ridiculous for Alchem. Okay, the other thing is like I read through their Discord and like all the mods, and so like I got into it a bit with Scoopy, and he DM'd me and we discussed it, and I said like I would he basically promised me that like the LPers would get paid back, but the thing was messy because of the exploits that happened after, and they needed to figure it out. But like if the other thing is like I looked through their Discord, and like the mods were saying that I guess this is a really complicated story, but another thing that they have is they have like an AMO, which basically they issue this Alchemist ETH, and it's being backed by something, right? So then the interesting thing is part of the curve pool was actually the backing for the ALEs. So they have a pool of funds that they use to back ALEs, and they put those funds into the curve pool to earn yield as part of like the self repaying thing, right? So like I think like maybe half of the curve pool is actually owned by the protocol itself, and half is owned by like other users. So like basically what they were saying is like, well, this is our liquidity anyway, which is somewhat true. Yeah, half of it is, but it ignores like the half that other people put in, and then also like because of all this MEV action that's going on, and like the exploiters, the actual backing of Alchemist ETH is below 1-to-1. So then it seemed like the mods, or at least the people important on their Discord channel, they're basically saying that it's their number one priority to restore the peg by restoring backing, and then and any funds left over would go to the LPers, which in my opinion is just stealing funds from the LPers in order to like save your own project, right? So then
they want to spend your money to buy. No, actually, they don't have to buy anything. They just take your money.
They
because
take
that
your
becomes
money
the backing.
and put it into the pool, which backs their token, or is supposed to keep peg of their token, right? But it's, I mean, some of it is their money because they are LPers and Curve, but like a lot of it also isn't their money. So then like I had a talk with him, and I said like the other thing is like it took him like an hour to admit that the money that was sent to him was the Curve LP's money. I was like, can we just like agree to a fact that the money that was sent back to you from the exploiter isn't Alchemist's money? Like the treasury doesn't own this money; it belongs to the LPs. And then he would just like sort of change the subject and be like, you know, this has been tough on all of us. Like we're working through all options. I'm like, this is not that difficult, man. Just, like it's either the LP's money or it's the treasury's money. It can't be both. And like he finally admitted, like, yeah, it's the LP's money. We're looking to the best way to repay them, but because of this whole like MEV situation, and then the pool being exploited after, there isn't a very obvious way to repay everyone, which is fine. But
I don't get that, because isn't the obvious way to take the snapshot of the pool before it was hacked, and then you call up all the MEVers and you give yourself like a month to do that to get money back, and you see how much ether did that get.
It's not exactly clear for this reason. During and after the hack, there are people that were panic exiting the pool, right? So like if for example, after the exploit happened, well, let's say you had like 100 Ethereum worth it, and now it's worth like 10 Ethereum in AL ETH. If you exited the pool after the hack for 10 ETH on your 100 ETH, you're not due back the entirety of the refund, right? But then it's not clear if you're due back anything, if you're not due back anything at all. So like I agree with him. It's definitely a messy situation.
Okay, I understand with the people who got something out.
Yeah,
it just becomes impossible because the price will changes for every transaction.
Yeah. But the other issue I have is that I feel like maybe I'm understanding this incorrectly, but I feel like they're sort of relying on governance votes to figure out like how to handle this situation, which is like really, really bad and really stupid, because the government's votes, they're going to be in line with the treasury and like the foundation, right? So the governance, like if I was a governance token holder and I was an Alchemix ETH holder, like my vote would be like, fuck these other people, let's steal all their money and then make sure our token is backed 1-to-1 at the end of the day, which I mean, like there's like a conflict of interest between the people LPing and the people that are like figuring out the best solution. So then like I just wanted to point this out to him and point out the fact that they're still to this day, they're holding the funds of that don't essentially belong to them, and they don't have a plan in place. And then like a lot of the mods are saying that the utmost priority isn't to return the funds, but to like restore backing to their token, which is essentially stealing funds. So like like I said, I ended up deleting my tweets. Like I didn't want to accuse them of stealing. I mean, like eventually maybe they'll return the funds to the LPs. And to preface this by saying, like, I'm not even an LP holder. I actually, like, we talked about this the other day. I bought some Alchemix ETH when it like dumped down to maybe like 50 cents on the dollar, just because like it only lost like maybe like 15-20% of its backing. And I'd since exited that position. So like I really have no horse in this whole race. But yeah, it's just like a moral thing that like I feel like, or I felt like these funds should be returned to their rightful owners, and that they're definitely taking their time in order to do that, if they do it at all.
And it's one, and like a moral thing is one, but if everybody's going to keep doing DeFi, and it becomes acceptable to just say code is law because we had a governance vote, then there's not going to be a lot of trust, because you just what's it, like tragedy of the commons? It's just like it doesn't work.
Yeah, it's especially when like the people actually impacted by it don't get a vote. Like if you're a Curve LP holder and you don't hold the Alchemix token, you have no vote in their governance. So
one other interesting part is that I guess Curve haven't actually got the bulk of their funds back anyway, right? I feel like that's still with the hacker, as far as I know.
The actual Curve from the Curve ETH pool, I think, is with the hacker. So Curve like offered them a white hat bounty of 10%. I don't. But by the way, I don't know why white hat bounties are always 10%. Like, they're like anytime someone gets hacked, they're like, you can keep 10%. It's but they offered like the white hat bounty of 10%, like within a certain time, and then that time passed. So now the 10% goes to whoever like locates these motherfuckers and like outs them, I guess. But I don't think anyone's made much progress on that.
Yeah, it sounds like it's all going to be very like take a while anyway. I know it's like because Alchemix, the AL ETH vault's still down. Like no one can really do anything. There's nothing going on right now.
Yeah. So I mean, like, if anyone from Alchemix is watching this, like, I didn't mean to shit on your project or anything, but like, I feel like you're holding funds that aren't yours, and you should do it as quickly as possible to return the funds to their rightful owners.
And I was thinking, like you just said, this is going to take a while, but it is interesting to compare this to like an empty Gox or FTX or Celsius or what is it, Genesis situation, because I think compared to the traditional system, this is probably going to end up really well for the creditors.
Yeah.
In most of these cases.
Yeah.
So it's difficult with incentives, but at least we don't have a process that is hostile, and where in like FTX and others, there are court appointed lawyers who will steal from the creditors.
Yeah.
And this kind of thing. So it is sort of like the way this is handled usually, I think is another really good point for DeFi.
Yeah.
Yeah.
Yeah. You don't
People
have like
actually do
John
talk
Ray
and
or whoever
yeah.
spending like $100 million a month, like trying to figure out how to use Uniswap to liquidate tokens.
And then also saying, oh, by the way, that now we're gonna use more money because we might want to restart this. So let's spend more money out of
That's so ridiculous. That's such a stupid idea. Like so like the reason why like FTX, like the relaunch, will never work is it was clear that the thing that FTX has is they have like an amazing exchange, like the user interface, like everything about it is very nice. What they didn't have was like any clue as to security or storage of funds. And then now you have like these boomers coming in that want to relaunch the exchange. They're trying to figure out like they obviously had to revamp the entire storage, like how the exchange operates on that end, because like now we know that Sam was storing private keys on like Google Cloud or Amazon Web Services or whatever, and
Dropbox,
he didn't actually have he didn't have like hot and cold wallets to handle user funds. I just have no faith in the team to figure out that aspect of running an exchange in order to make it work.
Yeah, it is. I mean, what you do these days is you outsource it, right? Most new exchanges will outsource it to Fireblocks and so on. But still, I mean, it's not straightforward.
Yeah. I mean, I guess that they can outsource it, but are they going to pick the correct partner? Like, I mean, like a lot of the exchanges that I've outsourced it to, like maybe less than stellar partners, also have had issues with the partners not really working out.
Yeah, I guess there's been a few of those.
Yeah, I mean, like the whole BitGo, or are they still around?
I think they are the issuer of Wrapped BTC.
Yeah. Okay. Yeah,
So
they've had some issues in the past, and you know. Oh, well, one other thing. Speaking of the 10% white hat bounty, I guess it was like a week or two ago, but I don't know if you guys saw this. So there was a bot that was basically following the top NFT traders, and then like either trying to front run their orders or copy their orders. And then one of the traders noticed this. So what he did was, like, I think he spent a few weeks to accumulate all of the Azuki NFTs that had like certain traits. So I think there may be 50 of them. So he basically like used various wallets in order to accumulate all the Azukis that had a certain trait. And then once he got that done, from his main account, he put in like these ridiculous bids of, I think it was like 100x or 50x of what they were actually worth. And the bot, the way the bot works was, they basically they see this bid, and they basically bid on all the NFTs that are similar at this price. So then, like all the orders filled instantly, obviously. So like I think that Izukis were trading at like 5 ETH or something, and he sold each of them for 50 ETH. So then he ended up profiting like it was like somewhere around 800 Ethereum, and then the bot owner like messaged him on Twitter and said like this is great information or great job, like please return the funds and you can keep a 10% white hack bounty for this hack.
There was another one that I literally just saw today as well. Someone was buying mutant apes or something, and someone had put in like 2.6 mil to buy mutant apes on OpenSea, and they were buying them on OpenSea. So someone realized that the floor was lower somewhere else. So people just keep buying them on Blur and other places, and then they'll just list them on OpenSea. And this guy just keeps buying all these, and people just cycling through and just taking his money from this boomer NFT buyer. It's really weird how the NFTs are so easily gamed.
Yeah.
Well,
I
not really.
remember
Look at the people doing it.
Well, yeah. That is true.
This is a random story, but like there's this girl I know who messaged me one day. She was in LA and she met like she met like a homeless guy who claimed to be like a crypto billionaire. And the way he verified this was he had like a wallet, but I use the term wallet loosely. I think it was like an Exodius wallet, but he didn't have the private keys, so it was just like the public key to the wallet that had $1 billion in it. And then he also said he had $1 billion worth of NFTs, and he pulled up his OpenSea, and then his OpenSea had one NFT that was like an MS Paint thing of a guy like riding a bike. It was like the shittiest photo I've ever seen. But it was minted on Polygon, and he put an ask price for $1 billion on Polygon for it. So then, like at the top of his OpenSea app, it says like his assets are worth like $1 billion. So basically, he's going around like with like these two apps on his phones, just showing how he has like $1 billion worth of NFTs and $1 billion worth of Bitcoin.
My God.
Man, I'm just happy Polygon has a user. It's good for them.
Polygon. I actually messaged Polymarket to try to get them off Polygon, but I guess they'd have to rename their platform to something else. But we'll see. Shout out to Polymarket. I like Polymarket a lot. It's like basically like a current events betting type thing. It's basically what like Augur should have been.
Oh, nice.
But they're for some reason on Polygon, and but I had a chat with them the other day and told them to get the fuck off Polygon because it's going to be dead soon.
Yeah, I love this. Like there's something you can bet on here. It says the bet is, will Milady outperform Bored Ape through August 31st?
Yeah,
this is really good.
It's done pretty well. They have a bunch of like pretty interesting markets like that.
That's cool.
If anyone from Polymarket is watching this, you and I both know that Polygon is going to be a dead chain. It's time to move to greener pastures.
What do you say, Arbitrum? What do you think?
Yeah, I'm actually trying to get them to move the mantle, but we'll see.
Yeah, of course you are.